Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. Canadians are just about as optimistic as they've ever been about the growth of Canada's housing market over the next year, according to a new poll released by Nanos Research Group. Despite looming interest rate hikes, predictions of a 20 to 25% crash in housing prices, warnings that we're in a speculative bubble, and more warnings that Canada is the second most frothiest, the most bubbliest housing market in the world, Canadians remain optimistic.
But I'm optimistic.
So what I want to do today is go over the findings in the poll, as I think it's important to gauge where the population currently is when we're trying to understand the extent to which new regulations, new rate hikes will work to cool down this housing market. Then I want to compare the poll to some other polls that have been taken in the past on the housing markets, as I think there's some stark similarities between this poll and some polls that were done in 2007, which should help us kind of understand where we are now and where we should be in the future. And then I also want to go over what to look for next, as we do have some data coming out, which should give us a much better idea of what's going to happen vis-a-vis interest rates. We do have a major update coming out next week, as Stats Canada is set to release January's inflation number, which should have a big impact on the timing and severity and extent to which the Bank of Canada will be raising interest rates to tamp down that inflation, to cool down that housing market. Click like and subscribe if you want to get those updates, but for now, let's get into this poll. So when Canadians were asked whether or not they thought real estate would go up in their neighborhood in the next 6 months, 64% agreed that it would, while 27.9% thought that it would stay the same. Given the rise in pricing of Canadian home prices over the past few years, it's unsurprising that Canadians would think that it would continue to go up and up and up.
Can't stop. Won't stop.
But however, when Canadians were also asked whether or not that they thought the economy would continue to gain strength or whether or not it would weaken, 45% of respondents said that we would see a weakened economy over the next 6 months, whereas only 22% thought that it would get better.
We're in a lot of trouble!
While it might seem counterintuitive that we would see this massive disconnect between those who thought that prices would go up during a weakening economy, we've actually seen this phenomenon before. When we look at a poll from June of 2007, right before the 2008 financial crisis, U.S. respondents had much of the same sentiment as Canadian respondents are having now. During the Pew Research poll, 62% of Americans expected home prices to continue to rise, while only 40% said that they had a fair economic outlook, and 25% saw poor economic conditions increasing. Granted, this is not 2007-2008, which was largely a result of lax mortgage qualification requirements, and right now is largely a result of cheap money, a lack of supply, and I think to a large degree FOMO, which, as we'll see, fear of missing out, is driving a lot of the housing market right now. However, these two polls do show that perception can be largely disconnected from reality. In fact, these polls show that respondents, Canadians right now, cognizant or not, do see that there is a large disconnect between the value of our real estate and our underlying economic conditions. Well, the polls show that Canadians are wary about the economy, wary about the inflation rate, and this has been borne out in other polls, largely wary about the increase in interest rates, but are still jumping into the real estate market anyway, which leads us to this FOMO phenomenon, fear of missing out. Canadians still think that these real estate prices are going to continue to go up and up and up and want to get into the market, even though they know that the economic realities don't bear this out, don't support the real estate market that we're seeing. And it's quite obvious to any onlookers, a booming real estate market and a weakening economy can't go on forever. Something definitely has to give.
This will not stand,
And I think this has been really borne out when we look of the multiple reports of Canadians jumping in to get pre-approvals as they rush into the market, as they want to get in before rates go up, before the Bank of Canada and the government with its new regulations coming down, before they try to put a big tamp down on this market, before cost of borrowing increases. So Canadians do recognize that something is coming, but they still think that the real estate market is going to continue to go up and up and up over the next 6 months. So this really does support what we've been saying over the past few weeks, past few months on this channel, that as Canadians recognize that interest rates are going up, that the end of cheap money is near, and that we're definitely in for some economic tightening over the next year, 2 years, even further after that, They want to get in before the bad times come. So while Canadians see that real estate prices continue to go up, they are really creating a self-fulfilling prophecy. They're jumping into the market, trying to flood in as fast as they can, knowing that these cost of borrowing, the new regulations from the government, are going to tamp down this market, but they want to get in before that happens, before the cost of borrowing goes up. So I think this poll really shows that while Canadians understand that the real estate market is largely divorced from economic realities, their fear of missing out is really what is driving them to continue to flood into the market, even though they well know that this market is going to be slowed down in the future. Maybe not within the next 6 months, according to this report, according to a lot of reports, but it's the real estate slowdown is coming to a theater near us very, very soon. So this poll really does support the last few indicators that we've seen, with RBC predicting that the Canadian real estate market is going to continue to thrive for at least the next 6 months, with the Bank of Canada expecting that we're not going to see a slowdown back to normal conditions until 2023. That it seems like the Canadian sentiment, the respondents in this poll, do seem to fall in line with these indicators that we've talked about previously on this channel. With all of that said, though, interest rate hikes and higher cost of borrowing do tend to bring people back down to reality. The U.S. inflation rate is set to come out tomorrow, and there's already been quite a few murmurings that the Federal Reserve will seek to put the brakes on quick. Will seek to go to unprecedentedly almost move to 50 basis point hikes. That is about 0.5% rate hikes rather than the traditional 25 basis points, 0.25% that we've seen in the past. So the Federal Reserve does seem to understand they might have to move very quickly to tamp down this inflation, and Canada probably isn't that far behind. The Bank of Canada Governor Tiff Macklem has said that we're probably going to hover around 5%. Last month we were at 4.8%, and if we do get up close to where the U.S. is, if we go much further, over 5%, around that 6%, 7% range, and the Federal Reserve does move to raise rates much faster than we're accustomed to, expect the Bank of Canada to also move that fast on rates. Expect them to put the brakes on fairly quickly as well. Once these interest rates come into effect and we start to see a slowdown, it is very well possible that we could see a very fast slowdown, and this consumer sentiment, this Canadian home buyer sentiment about the real estate market can change very quickly. It was only a few months after that poll in 2007 that the Federal Reserve was lowering interest rates as a means to help prop up the U.S. real estate market, as by, I think it was October, even those with great credit scores, even those well-qualified buyers were having a hard time getting mortgages. So things can change that quickly. So while Canadians do have a fear of missing out right now, and Canadians are trying to rush into the market, that could change very fast once these interest rate hikes start coming out, especially if they're more severe than we're anticipating. We will have updates out on next week on the Canadian inflation rate, which, as we've said, will have a big impact on the pace, the timing, and the severity of Canadian interest rate hikes. So if you want to get those updates, click like and subscribe, and thanks so much for watching.